Have you ever wondered how people make money from the comfort of their homes just by predicting if a commodity's price will go up or down? Welcome to the intriguing world of trading, a realm where fortunes are made and lost with the rise and fall of market prices. At its core, trading is about buying and selling assets. These can be anything from stocks and commodities to currencies. The objective? Buy at a low price and sell at a higher one to secure a profit. Sounds simple, right? But there's more to it than meets the eye. Successful trading calls for strategy, research, and a keen understanding of market trends. It's a bit like chess, only with real money at stake. Each move you make can either bring you closer to your financial goals or take you further away. So, the question is not if you can make money in trading, but how well you can manage the risks and rewards. Did you know that successful trading involves more than just buying low and selling high? Indeed, it's a fascinating dance of various elements that, when understood, can unlock the potential for significant financial rewards. Let's break down some of these essential trading concepts into simple, digestible terms. Firstly, we have supply and demand, the very heartbeat of the market. Like any marketplace, trading involves sellers who create supply and buyers who create demand. When demand exceeds supply, prices tend to rise, and when supply outpaces demand, prices typically fall. It's the classic economic principle in full swing. Next up, we have market trends. These are the general direction in which market prices are moving over a specific period. A trend can be upward, also known as bullish or downward, referred to as bearish. Identifying these trends can provide insight into potential future price movements. Now let's take a quick look at some basic trading terminologies. When we say bullish, we're talking about a market condition where prices are expected to rise. Conversely, bearish refers to a market state where prices are anticipated to fall. Long and short are simply trader speak for buying and selling. If you're going long, you're buying with the expectation that the price will rise. If you're going short, you're selling with the hope that the price will drop. Lastly, we cannot overlook the impact of global events on trading. Economic news, political developments, even weather events can influence market conditions and cause price fluctuations. Being aware of these events and understanding their potential impact is a key aspect of informed trading. So, there you have it. These are some of the essential concepts that make up the intricate world of trading. They are the building blocks, the ABCs, if you will, of a trader's vocabulary. Remember, understanding these concepts is the first step to becoming a successful trader. So take the time to learn them, understand them, and apply them. Only then can you truly begin your journey into the exhilarating world of trading. What if I told you that trading without a strategy is like sailing without a compass? Yes, you heard it right. A trading strategy is the backbone of successful trading. It's as crucial as the wind to a sailboat. Having a strategy in place allows you to manage risk effectively. It's like having a safety net, protecting you from the unpredictable waves of the market. A good trading strategy also empowers you to make informed decisions. It's like having a bird's eye view of the market, enabling you to spot opportunities and avoid pitfalls. Moreover, a strategy keeps you focused during times of market volatility. It's your anchor in the storm, keeping you steady when the market is in turmoil. There are different types of trading strategies to explore: day trading, swing trading, and position trading, each with its unique approach and benefits. A good trading strategy is your roadmap to success in the trading world. Remember, without a map, you're merely drifting. Ever wondered why many people fail in trading despite its seeming simplicity? Well, that's because trading is more than just buying low and selling high. In reality, it's a complex ecosystem where every decision carries weight. Trading is a high-risk, high-reward venture. Yes, the potential for profit is there, but so is the potential for significant losses. It's not uncommon for traders to lose their entire investment, especially those who dive in without fully understanding the market dynamics. One of the keys to successful trading is continuous learning. The market is constantly evolving, and traders must adapt to these changes. It's also crucial to have emotional control. Trading can be an emotional roller coaster, and those who let their emotions dictate their decisions often end up losing. Prudent risk management is another essential aspect of trading. Knowing when to take profits, cut losses, and manage risks can mean the difference between success and failure. Trading isn't a get-rich-quick scheme. but a journey of continuous learning and calculated risks.